Okay, so with the forex market, with my understanding, uh, is a digital representation of our financial market. It's just a digital representation of the financial market. Yeah, it's just a digital representation of the financial market. Yeah. So on this platform right here. So what normally happens in the past was that people will have to call the brokers to either trade. Hello, yes, ma'am. Okay. So it's just a digital representation of what happens, yeah, in real life that have been stimulated digitally. So with these ones, we have the major pairs and then we have the minor pairs. Those that trade with the USD, those we have the GBD, we have the USD, and a couple of them. Yeah, we have the major pair and then the minor pair. With those ones, I think I'll search for a video to teach you guys, so that you guys will watch. Yeah, you guys will just watch. Yeah, everybody. One thing is that some people will rather focus on the theoretical and then may even how God is it. Some people master the theory, but they are not able to make money. So what I'm going to show you is just very simple. Who is that? Mr. Darlington, can you just mute yourself, please? Yeah, welcome, Gideon. Welcome, Gideon. Yeah, welcome.
All right, thank you, boss.
Okay, sure. So when you just get here, you just mute yourself, and then that's all. So as at now, these are candles. These are candles, and then the candles, depending on how you want it. These are just the candles, and then let's go. Let's start from the this in. So in the market, this is a daily time frame. We have time frames in the market. We have the time frames. Time frames. So with the time frames, we have the. If you can look at my this, we have 6 month. M stand for month. We have 3 months. We have a month, and then we have the weekly time frame. We have the daily, and then in the daily too we have 24 hours in the daily. So the weekly contains 5 days, depending on what currency pairs you are trading. And whatever I'm going to teach you now, you can use it on the forex, the crypto pairs. But I want us to just focus on 3 pairs for now. We are going to focus on the gold pair. We are going to focus on any pair that use the USD. And then when we look at these things critically, we have the XY. This is a dollar index. This is a dollar index. Yeah, this is a dollar index. And then the dollar index is directly opposite to any currency that trade against the dollar. So with the currencies that trade against the dollar, we have how would I say, any currency pair that you see trade against the dollar. We have the GBP USD. We have they are here. Let me see. So when you come to this side, you type USD pairs. You see we have stocks, we have funds, we have futures, we have forex. So when you come to the forex and you type USD, these are all the pairs that trade against the USD. We have the USD JPY, we have the USD CAD, we have the USD CHF. The CHF are minor pairs, the JPYs are minor pairs, and then these are the pairs that we have: the Swiss franc, we have the Canadian dollar, we have the South African money too, and a whole lot of things. So, but we are going to just focus on the major pairs. We are going to focus on the major pairs. Yeah, welcome, Nikita. How are you doing? Yeah. So I just want us to be very serious. I just want us to be very serious. I know you guys are serious. That's why you have dedicated your time. That's why you have dedicated this. Like you could be doing certain things that are very important, but you chose to study. One thing you know is that in this time of the year, the century, the Bible said, "Knowledge shall abound. Knowledge shall abound." Just like the waters covers the sea, there's going to be a lot of knowledge, but it will only take people who be able to use the knowledge they have to be able to make money. Because the more knowledgeable you are, the more financially free you become. Yeah. So there's a correlation. Or there's always a correlation between the GP, the DXY. This is the dollar index. Well, I wish I could make somebody an admin. Is it possible? Is it possible to make somebody an admin? Please, can you hear me? Is it possible to make somebody an admin?
Yes, I can hear you.
How I say, is it possible to make somebody an admin?
On Google Meet,
Yes, please.
I don't know about that.
I think Zoom does that, right?
Yes, Zoom does
I
that.
wish I had a Zoom account. I would have done this on Zoom. I wish we had a Zoom account, but let's see for another day. Welcome, Fatih. Uh,
Thank you.
okay, sure. So we are recording whatever it is. You can watch the replay, but we've not gone too deep. So the DSY, these are paid for. These are paid for. This is a paid for trading view. So the DSY is opposite to any currency that trade with the dollar. Where are you? These are just indicators, and let me take off these indicators. So if you look at the DSY clearly, you can see that this is opposite. It's more like they are opposite. They are. I say, wait, let me take off all the indicators here. You can see this one is opposite this. Opposite. So any currency that trade with the USD, anything that is trading with the USD, trading against the USD is opposite to the DSY. So every trader, if whenever you are trading the USD pairs, you should always have your DSY. Uh, this is more like the lead. It's more like you are running a marathon, but everything is just in the opposite, and so this is what you have. The DSY is opposite to any USD pair. Let me the euro USD to let's see the euro. You see how the euro USD, so it's opposite. When this one is selling, this one will be buying. When the DSY, the dollar is selling, this one will be buying. When the dollar is selling, this one will be buying. So last week, from Tuesday, this 26th June 2024, when the euro was when the dollar was selling, the euro was buying. So sometimes you might ask yourself, what is this happening? But that's how it's been ever since the forex market has been made. So you have to call First, you have to call with your landline. You have to tell the person to clock in your trade for you, and that one, it takes a lot of time. It takes a lot of man labor and a whole lot of things to get this. Yeah. So with these things, as I said earlier, it's just a digital representation of what is happening in the financial market, and this mostly is traded by banks, big institution, financial institution. Maybe you go to Car Bank, for instance, they have somebody who trades for them. They might give the person a very big amount of money, and the person will be trading for them. Yeah, like even from now, I'll be going to one place in Accra. I have to go and take about $1,000 to trade with somebody, but we have to sit down first and then see how best we can go about it, and then maybe it's going to be 40, 60. When I trade for him, I'll take 60 and give him 40, or depend on how much you go. So if you're able to learn this skill very well, you can make a lot of money. You can make a lot of money. I want you to stick to what I'm going to teach you. There are many methods, there are many ways of killing a cat, but this is what I have learned. This is what I have learned, and it is working. What I've learned is working, and I want you to don't be afraid, don't be scared of anything, don't try to compare yourself with anything, because with this there are 1,001 strategies. There are 1,001 strategies. I fix iPhones. I might not be the best iPhone technician in Ghana, but the little I know, that's what I used to maximize. And for almost a decade now, that's what I live from. But I realize that, as your needs and your responsibility increase, you also have to look at other avenues. So I chanced upon it. I don't know if you've heard of one Forex trading they did at UPSA. There's one gentleman who is called Dela Aram Market God. He's my cousin. So he's the one who actually introduced me to this thing, and from there he trades it. Most people trade support and resistance, but what I'm teaching you is by ICT. He's on YouTube, but his video, he talks a lot. So if you are not with him for a longer period of time, you'll not be able to understand him, right? So with time I'll be chipping in certain things. So let's go to the gold. Gold is one of my favorite pairs. The gold is a metal. The gold is one of the metals that I was trading here. Yeah, this is one of the metals. So I just want us to just go to the basics. Please, if you have your pen, you can just be putting down certain things. If you have your pen, I just pray everybody should have a pen. I'll give you a video on how to design your trading view platform so that you'll be able to understand. So as I said, this is just a digital representation of whatever had happened in the day. This is for Friday. This is for Friday. This is, please, can you all see the arrows? If you can see the arrows, just say yes. Can you see the arrow very well? Please, can you see the arrows? Are you guys on, please? I just need a swift yes or no. Can you see?
Yeah, we can see that.
Okay, so this is what happened on Friday. This on Thursday. This on what? Tuesday. This on Tuesday. This on Wednesday. This on Monday. If I close here, if I take this and then I draw here, we are currently on the daily time frame. If you look at here, this 6 months, this 3 months, this a month, this a week. So what I've just highlighted in the daily for the 5 days is now represented in 1 week. This is it. What I just represented is what I just work on Moses. What I just highlighted here is in what 1 day. This in 1 week. This is a 1 week. So if I draw this another Friday, this another Thursday, this another Wednesday, this another Tuesday, this another Monday. If I extend this to this side and I come to the weekly, it's going to cover 2 candles. So you realize that in the month we are in the, I think we are in the, are we in the third month, right? We are in the, yeah, we are in the, I think, yeah. So we are in the, this is the first week of June. This is the second week of June. So if you extend this to another this, now it's covering about 15 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So this is for what? 3 weeks. This for 3 weeks. If I draw this and I extend it here, this now a whole month. This a whole month. When you come to the daily, so this is how the market has been designed. The market has been designed like how the clock works. We have 60 seconds. 60 seconds makes 1 minute, and then 60 minutes makes an hour. 24 hours 24 hours makes a day, and then we have 7 days makes a week. Yeah, so this is how the thing is. And then we have 4 weeks to 5 weeks, it makes a month. So this is how it is. But one thing you should know is that these things have been stimulated. It's an algorithm. If you did I did telecom engineering, if you did a computer science, or you have a little idea of science, you realize that algorithm are more like written codes. Algorithm are more like written codes that perform duties that they have been assigned to. They are written codes that have been programmed in a way to perform certain tasks. And then let me obligations is the same thing. Tax obligations. So these things have been chipped, it has been etched into our financial market. But with these things, you realize that although it is human beings that created these algorithms, there are some lapses. There are some lapses in this algorithm. There are some lapses in this algorithm. Somebody will tell, maybe if you have heard, and they said there are a lot of buyers in the market, there are a lot of sellers in the market. It's a hoax. It's just a lie. You understand? It's a program thing. And then we have these people called the market makers. Market makers are the people behind the scenes who control the market. The market makers are people behind the scene that controls the market. There are people who control the market. So they determine that today or this week, let's sell. Today, this week, let's buy. But they have etched it into the algorithm. So this is a programming language. But one thing we are going to do is that we are going to take advantages of the glitches in the market. This is how our trading strategy is all about. We are going to take advantages of the glitches in the market. Yeah. Everybody has a weakness, and that is one of the advantages that God uses for us to be able to excel in life. Your weakness is one of the things that will help you to accommodate certain things, certain traits, and be able to overcome certain things. The weakness is inevitable and is very needed in every situation. So in this programming language, there are certain weaknesses, there are certain lapses. Those are the things that, as a financial student, or because everybody here does finances from the day we were born. We are all doing finance. Go and buy this, go and sell this, go and buy this. Even when you wake up this morning, you are paying. You've turned on your lights, you've started billing, they've billing you. The Pepsodent you use is expensive. You bought it. The cloth you are wearing, you bought it. If you're a woman, the pad you are using, you bought it. Everything, almost everything around us is what? Expensive. And so everything is monetary, is monetized. So if you don't take advantage of your money, if you don't study how money functions, you'll not be able to make a lot of it. And one thing you have to know is that money has no what? Emotions. Money that has no emotions. It doesn't care how educated you are. It doesn't care where you live. It doesn't care who your mother is. It doesn't care who your father is. Money does not care. The most important thing is that money obeys strategies. It obeys principle. So with the Google Meet, after every 1 hour it goes off. So whenever it goes off, please don't run away or don't be don't be distracted. Don't be distracted. Just wait patiently. I'll put another link in the Telegram group, and then you join as soon as possible. So this is the daily. This is the daily. As I told you, we have the time frames. These sides are all time frames. This is the daily. This is yesterday. This is Thursday. So this a candle. Everything that happens in the financial market is represented with a candle. This is how a candle is. This is a candle. I think this color, I don't like it. Let me see this color. Let me use this. Okay, this is okay. Let me just. This is a candle. Welcome, Emmanuel. Emmanuel is from Uganda. He took my free course. He was the one who made 500 pips last week. I'm very proud of him, and I just gave him the access to be here. He's very dedicated.
Yeah.
Welcome. So he's very dedicated. I want us to be dedicated. Yeah. So this is the candle. Please, can you unmute yourself, please? This is a candle. We have the high. This is the high of the candle. Please, if there's a noise in your background, can you off it, please? I'm easily distracted by noises, please. Even when I'm on the pulpit, a little noise, I'm distracted. So please, if there's a noise in your background, can you push it? So this is a high. And the green one stands for what? You can choose to do your this in anyhow, but the green one in my case stands for bullish. And when we talk about bullish means what? Buy. Bullish means buy. Means buy. So they took it from the bull. When a bull wants to attack you, it hits you from below and then raises you in the sky. When a bull wants to attack you, it hits you from below. Like it hits you, it picks you up from the ground and then raises you up. It kicks you upwards. That's how a bull. So when we are talking about a bullish market, it simply means what? Buy. And then when we are buying, every week we have the opening. This is the opening. So we have the opening. This is how the market is like. This is the opening. So here we have the opening. It's very simple. Don't go and confuse yourself. This is the opening of the market. This is the opening. So the market opens. For a bullish scenario, this is the opening. Let me drag it a little. I'll let this one come a little. So this is the opening. You can do it open or something, anyhow you can understand it. And then we have the close. So this is the close. I want you to just pay attention to this. This is the close. So every candle has an opening, it has a low, it has a high, and it has a close. So let me take this and then diagnose. So this is how the market comes. For a bullish market, it opens this way. This is the opening. Mostly it happens on a Monday. That's for the on a Sunday. That's for the weekly range. And then comes to low. Trade high. And then comes down and closes. No, this I just messed this drawing up. Peter. Yeah, so this is how it is. So this for a bullish market. So every bullish market start from what? The open. Open. It opens up. create a low, goes high, and then what? Closes. It's very simple, please. Everybody here is very simple. It's not confusing at all. So this is a candle. When you are here, please, I want you guys to look at this side. There's an open, there's a high, there's a low, and there's a close. There's an open, there's a high, there's a low, and a close. There's an open, there's a high, there's a low, and a close. So if I put my cursor here and then look at this side too, look at this side too, this side too. This is a candle. So the open here is where are you, Joe? Be careful. So this is it. This is a candle. When I use this line, we call it the horizontal ray. When I click here, the open is 104518. Where are you? Be careful. What's happening? So the high of this is, oh, thank you. So the high of this is 104518. You can choose to use this cursor or you just use the keyboard 518. This that's rather the close. No, that's the opening rather. I was looking at the opening. This is the open. So every candle has an opening. So this 104518, and then this is the high. This is the high. That's the high of it. So it's been programmed in such a way that you can see the high. This is the high. So immediately you put it here, your eyes should always go here. I think there's a functionality somewhere here that does that. Is it the object tree? There's a functionality here, but I think with time I will show you where you. I think I chanced upon it one of these days, but I will show you how it is. So every candle has an opening. This is an opening. So when you put it here, the opening, the high is 104546. It's always on point. And then when you come here, this is a bullish market. So the bullish will rather open here. The bullish will open here, go high, and come down. So let's go to the bullish, and then I'll show you something. This bearish, this bullish. So the bearish, this is how the bearish behaves. The bearish, let's use our normal black. This is a bearish candle. It has a wick. This one here is called a wick. We call it a wick. That's it. That's not John Wick and something like John Wick. Yeah, that's a wick. That's how we call it, a wick. So every candle has a wick. So for the bearish candle, this is a bearish candle. Please imagine how a bear attacks. When a bear wants to attack you, it crushes you. It uses its two fingers, two arms to hit you from up down. It crushes you downwards. So when we are talking about bearish, we are talking about a bear. A bear will hit you from your head downwards. It crushes you down. That's how a bear behaves. That's how a bear has been programmed to what? Behave. That's how the innate ability of the bear is to crash you from up. So when we are talking about a bearish market, a bearish will go down and a bullish will go up. So with a bearish, this is the opening. So the bearish is open. Let's you read. I've been on this chart for 4 years, so if I'm doing certain things, don't worry. With time, you'll be very fluent with it. So don't worry. You'll be as is it fluent. Fluent is for language, so you'll be very okay with it. Yeah. So this is close. So this is the high, and then this is the low. So with the bearish candle, the bearish will open, create the high of the week or the day or the month, come down to create a low, and then close. So these are a bearish behave. So the bearish will open here. You can use the clone or something. We'll copy it for you. So the bearish will open. I think there should be a way out of this. Clone here. So these are the bearish behave. For me, these are the basics. I like my life to be very simple. There are certain things I don't know, but the little I know is what I maximize. Yeah. Some people tell a lot of Kende, Doji, blah blah blah. I don't care about that. Come on, let's make money. That's what I think. That's what I think. Yeah. If you know other things, it's an advantage to you. For me, this is what I know, and it works for me. So, this the difference between them, as I told you earlier. This a bullish candle. This bullish. This a bullish candle. So with the bull will what? Kick you up. It kick you up. No, it's not. I think you guys already know how a bull behaves, so it's okay. So this is how it is. So sometimes you might see me draw something like this. What's a candle like this? This too dark. This too dark. So I think let me use white. Okay, white is good. Good girl. So say let me see the edges. So this more like what does it say? This for bullish. So the bullish comes this way, open, high, low, and then close. Let me do it well. So this is the bullish market comes up. It might not just come straight like this, but this is how it behaves. So if you have a pen or a paper, you can just write something here. So this one is for all of this. This is for all of this, and then so there's an open here. This is an open. There's a high here. There's a low here. And then there's a close here. So this is a typical bullish market. Why do I use green? It's because my mentor uses green. Yeah. And I think it's okay. He has the Abinakok or something. He has certain things with his mind. So he said it publicly. So yeah, so these are the things that make his. Please, this for bearish. I'm sorry. This bearish market instead. Bearish opens, go high and come down. So the bullish is this way. So the bullish will come down. It opens, comes here, go up, come and then close. So that's how the bullish, this is a bullish market rather, creates a low, just a high, and then this is an opening. Please, if you have any questions, I want you to ask right now.
Hello, Joel.
Yes,
Yeah,
sir.
sorry.
I'm listening.
Hello, Joel.
Yes, sir.
So, are we going to have the recorded
Yeah, I'm going.
version of it? So
Yeah, I'm going.
maybe on our own we can look at it again.
Okay.
But it looks like the thing. My eyes are doing. Who are you? Who are you? Who are you? At the point.
Wow. But okay, that's good. So, is there any other question? Who else has any question or suggestion or something? It's very simple. Who else? I think that's Peter who
It's
just.
simple for you because it's simple for you because you have an idea.
Okay. So this just what happens. Let me disconnect the Bluetooth. I'm using my Bluetooth this thing, so I think there might be. Yeah. So this exactly that happens. You understand? Please, should I progress or you want to absorb this before we continue? Is it too heavy? Hello, please, class.
Yeah, it's alright. Alright. If we'll go and look at it again. Maybe if you have the video, we'll go and watch it again to understand it better. But you can proceed.
I should proceed.
Yeah, you can proceed.
Okay. So this is what it's all about. So let me just clear everything. So as I've said, this is the market. So this is the bullish market. This is a bullish market. This is a bullish market. Yeah. So this is a bullish market. So this is more like a Venn diagram, Bisano. So the market opens, comes to create a low, and then go and create a high. Comes down and then close. Just simple. The bullish market opens, creates a low, looks for, creates a low, then creates, no, you, so the bullish market opens, create a low first, creates a high, then closes. That's how it does. And then with a bearish market, with a bearish market, the bearish so with a bearish market, the market opens, creates a high, comes to create a low, and then close. So how would you know a bullish market or a bearish market? The bullish market first of all creates a low first, but the bearish market creates a high first. So this is a high. This is a high. This is a low. And then this is an open with a close. There's a simple as that. Very, very simple. Just tell yourself this is simple. Let's go to the chart and then let me show you something. Let me use 1 month. I want you guys should look at it and then be able to cite the difference. So this is this is so this is a bullish market. This is the opening. The opening is 103.64. Let me use this. Let me do it from this direction instead. Forget about this, just look at this. The opening is 103 103.61. 103.616. So this is open. Now let me use this one instead. So that's the opening. It opens here. I don't know if this let me see the handwriting text. So this is the open. So the market opens first, comes to create a low. So this is a low. When you click here, the low is 103.272. 103.272. that's the low. And then this is a close. I told you that it first of all creates the high. The high is 106.839. One oh six dot 839. I think that's it. 106.839. 106.839. And then it closes here. Please, this high, I'm sorry. It creates a high. And this is a close. So with this one, the open here is 106.670. Open 106.670. I hope I got it right. So this is the open. This is the open 106.670. And then it creates a high. High. The high is 107.113. 107.113. So this is the first step. First step. Second step. So it comes here first, open here, creates a high. Second step is what? Creates a high. First step is opens, creates a high, then comes down to creates a very low. This is a low. The low is 102.463. Please, are we on? Please, are we on?
Yes, I'm on. Yes, we are listening.
Okay.
We're on.
Okay. So this is a third step. Third step is a low of 102.467. And then the last step. So this is the last step. Last step is close 103.4 103.497. So that's it. It's 4 steps. Even this one is a timely, the monthly frame. So this is the first step, second step, the third step, and then the last step. This one is the first step. This is the first step. This is the second step. You can say step or stage. Anyhow you take it, it's the same thing. This is a third step. And then this is the final step. Fourth or final step. So the same thing that play there will play here. So this same is the same as this. So this one, this is a bearish. So this is the first step. Second step. Third step. And then we have the fourth or final step. I don't think this is difficult, is it? Please, is it? Are you with me?
Yes, we are with you. It's not that difficult. Just need to practice.
And that's all. So I think let's end here. I don't want to confuse you guys. So the next class will be a build up on this. The next class will be a build up on it. I will download this. I will upload this on YouTube, and then you guys will take your time and then we'll listen.
Thank you so much. Thank you so much.
We are good, right?
Thanks so much for your time.
Yeah, we are good. So
Thank you very much.
welcome. So I just want you to just take your time, take a pen, take a book, and write notes. Take notes. Yeah. Just take note. At the end of the day, things will build up. The next one, yeah, we'll talk about liquidity. Yeah, talk about liquidity. So if even if I have opportunity, I can teach tomorrow, but one step at a time. So I'll put it there, and then next week or within the week, I don't know. Let's just stay connected. If one of the days we can even do a midnight or something, depending. But it's just that the Ugandan man will have to wake up around 2 a.m. or 3 a.m. Oh, that's 5 a.m. your time, right? Ima, is that 5 a.m. your time? Amen. So please, let's make time and then push this together. You guys can do it. You guys are brilliant people. You guys are very determined people. Yeah. So it would take